Well, that is a very good question, and it does not only relate to Europe, but also to the US. To go in the US to real rates that would be above zero is unthinkable, in my opinion. It would imply raising the Fed fund rate rapidly to 6% minimum. And in Europe, we have had a weak euro against the US dollar. Do you think that inflation is much lower than in the US? If you have a weak currency, it must be also like the cost of living increases also around 5-6% per annum. And what you said is absolutely correct. The asset markets, real estate, stocks, cryptos would implode, would collapse if you go to short-term rates at 6%. The insurance industry that bought bonds issued by the government, because they have to buy them at 0%, and short rates go to 6% or 5%, they'll all be kind of worthless. This is the problem with inflation. Once you leave it out of the toothpaste tube, it's very difficult to put the paste back in.
Yes.
And that's why I think that when people say, well, they will increase interest rates, it may be that they increase the Fed fund rate to 1%, that, let's say, assuming. But if in the meantime, inflation has gone from 6% to 8%, then actually the real rate has gone down to even more negative. You get the picture. Also in Europe, if say inflation accelerates and you increase the ECB rate to 0.25% or 0.5%, then the bond market will tumble and real rates go even more negative. This is my thinking, that actually optically the central banks lie to you and say, well, we'll do something about inflation, and that in reality they'll do nothing at all.